Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 3rd. I hope you guys are having a great day so far here and off to a good June. Let's start off with a few economic items here. We'll start with the market manufacturing PMI for the month of May. So in April, we had a 50.6 and a decline to 50.5. And then ISM manufacturing is another index for the manufacturing for the month of May. We had April for 52.8. Forecast is calling for a slight dip to 52.6 and it actually dipped much further to 52.1. So again, this is something we are watching. The manufacturing seems to be kind of drilling down on a macro level here. And again, this is not obviously great news because it's on the verge of contraction. So we want to keep our eyes on this, especially as we'll touch base on here on the next screen here, but we'll touch base on that. But to kind of complete this, so we got the construction spending for April. So in March, it was actually revised even further in the holes. It initially came out at down 0.9%, and then they revised it to 0.1% down. It fell 1.7% construction spending. Forecasts called for a 0.3% increase for the month of April. However, it just kind of flatlined in April instead. So overall, economic calendar, not so good today here. Headline news: stock market is mixed. Everything's pretty much up except for Nasdaq. Nasdaq's taking a little bit of a beating today, primarily due to the antitrust talk on Google right now, and then of course Apple and Amazon are kind of stocks are kind of in sympathy of it, are also kind of down a little bit. If you can, uh, I don't know correlation there. But anyways, also President Trump landed in UK. He's there for couple days. He's going to be over in Europe for the D-Day commemoration, so he'll be on both sides of the channel over the next couple of days here. Also on the investors' minds are the tariffs. We had, we talk about raising the tariffs again here in another couple of weeks on Mexico if they don't help with the slowdown of or at least help with the influx of illegal immigrants coming into the U.S. Also, we got the tariffs on China. China over the weekend basically came in with a white paper and put in their demands of what for us to continue talks, how basically had their demands, and of course they're blaming the U.S. as the U.S. has kind of blamed China. So finger pointing going on both sides here, and they want us to reverse some of the tariffs on a few of those items, and that's their list of demands. So we haven't seen yet a response from President Trump yet, but again, we'll wait and see. And of course, we're seeing the inverted curve, yield curve, deepening in this. And this is, of course, it's been pretty much 100% prediction of a recession. So this is something that is on investors' minds and worrying them. We're seeing numbers coming out on a global level, macro level for the global economy, and we're seeing things slowing down. China has been slowed down for a bit. Europe has showed have had those signs. U.S. is still doing okay, but at some point it will most likely come over to the U.S. and hit the U.S. at some point. Of course, the tariff talk is only exacerbating that further. So that's even what's on the investors' minds as well. Let's jump ahead, see how this is playing out in the bond market. And the bond market is up 2 basis points so far. A little slow, but we did have a pretty big day on Friday. It did improve. We had a improvement on Friday, so I would say yes. We have pricing's coupled with that because we started the morning off about 9 basis points. By the time we closed, it was up 22 basis points. So based on that, I would go ahead and say yes. Pricing will be a little bit better today as a result of that. As you can see here, yields are shrinking a little bit further. We're down to about 2.12 on the 10-year Treasury or yield, and that seems to be shrinking. It was just a matter of about a week or two. We were all the way up to like 2.43, in that range, and hanging between, for a while there, 2.37 and 2.43. We're kind of hanging that middle range there. Just recently, it just started dropping further and further down here, and of course, that's helping out mortgage-backed securities and thus mortgage rates. All right, folks. So you guys have a great rest of your day. Mortgage rates are a little bit better today, pricing-wise, a little bit better today, which is obviously good news for those who are looking to refinance or buy. And again, we'll look forward to see you guys tomorrow. Thanks so much for watching. Remember, this week we do have jobs numbers, so those will be the key ingredients this week. We'll have ADP coming out on Wednesday. weekly jobs claims on Thursday, and of course, the Bureau of Labor Statistics released their data on Friday, and this is for May's numbers. All right, again, thanks for watching. We'll see you guys tomorrow. Bye bye.